Good morning. Welcome to Stock Market Today. It is Friday, January 4th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. If you're on Stock Twits, I'm there as well under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics, and you can head over to chaikinanalytics.com to sign up for a free email. Follow along with this show, get free stock ideas every day. So U.S. equities were down hard in Thursday's trading, with the NASDAQ leading the decline on the back of a disappointing negative pre-announcement from Apple. Very rare, by the way, first time Apple's neg pre'd in about 10 years. Treasuries were stronger across the curve, with the 10-year note marking its lowest yield since January of 2017. The yen was strong as investors bid up the safe haven currency. Gold finished up about 90 basis points, another flight to safety there. Oil was higher, with WTI settling up 1.2%. As we get to the desk this morning, though, a little bit of a reversal. S&P futures are up 1.4% ahead of the jobs report this morning. Asian equities were mostly higher overnight. China and Hong Kong both up over 2%. Though Japan did come under pressure. European markets are seeing gains here this morning. Treasuries are weaker after the big rally yesterday, and the dollar is seeing a modest rebound on the yen cross. Gold down 20 bips. WTI crude up about 2%. And as we dig in, not a ton has changed from a big picture trend perspective here. The trend remains down. Support is at the December lows for now. Resistance, 25.30 and then 2600. What we are looking for is a less intense test of the December lows to signal that a durable base is forming. Interesting to me, if you look at the key charts, whether we're looking at the S&P 500 here, but if you look at the Qs, same type picture. Rally back here to broken support or close to it, and then failing. RSI remains in bearish ranges, so momentum confirming the weakness in price, as is money flow. Chaikin money flow here is bearish. You can see it here. I left out the word flow. We'll add that back for Monday. It is bearish here and continues to point to investors selling equities, de-risking their portfolios. So your market in a minute, if you're following along in that email at home. This is what I'm talking about in my note today to Chaikin Analytics clients. Stock dive lower as Apple issues a rare neg pre. We hit that. 10-year yield falls to 2.56%. We'll take a look at that chart and see where there could be potential support for yields. The trend in the FANG stocks is now clearly lower. Key themes that I look at on Fridays, I look at key themes and relationships in the marketplace to get a sense of, are we risk on, are we risk off, are leading parts of the market moving in the right direction? Key themes continue to point to risk off positioning, and futures, however, do indicate, as I said, a higher open here this morning. So looking at the power bars for the major markets in the U.S., Dow, no bullish stocks, 7 bearish or very bearish stocks. S&P 500, 10 bullish stocks, 133 bearish or very bearish stocks. NASDAQ, same type picture. You get the point. 4 bulls to 25 bears. Small caps actually outperforming of late. Seeing a nice counter trend rally in the ratio of small caps relative to large caps, although it is taking place below broken support, below a declining 200-day moving average. Hard to read too much into it of yet. I do think more time is needed for a base to build in small caps relative to the S&P 500. Flight to safety sends bonds higher, yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain strongly bearish. Major indexes remain strongly bearish. Our stock of the day. Now, given the fact that a lot of the groups are bearish, a lot of stocks, there aren't a lot of bullish rated stocks within bullish groups. We've kind of taken a different tact here for our stock of the day today. We're actually going to go with the stock of the day that I'm highlighting in my note to Chaikin Analytics members. So this is not auto-generated. This is my pick. It's in my note to Chaikin Analytics members today, and it is Netflix, and it's a bearish call. Netflix has a very bearish rating, a weak trend in a weak industry group. So we know that this is the type of stock that at the very least we want to avoid. And if we're so inclined to take positions to the bearish side, to look at opportunities in the options market, perhaps a bearish vertical put spread. But let's go through the analysis. Ribbon at the bottom of the screen shows us that Netflix has been bearish or very bearish since the July timeframe. And then late July, early August, the stock begins to underperform the S&P 500, and that the intensity of that underperformance has increased of late. Stock is now entering an overbought condition based on our overbought, oversold indicator, while Chaikin money flow is bearish and has been mostly bearish since the August timeframe. And the stock has been under heavy pressure. I've been waiting for an opportunity to highlight this as a bearish name, and we did get that opportunity today as Netflix triggered one of our proprietary signals, this one being the overbought sell signal that was triggered today. Now, mind you, futures are opening higher. We're pointing to a higher open today. So what I suggest is letting this one play out, see where Netflix opens, and then look for an opportunity to enter on the bearish side of the trade. I think Netflix does now present a good opportunity on the bearish side of the coin. As a matter of fact, on December 26th, in my weekly bearish insights note, I highlighted Netflix as a name we want to watch to open a position when an opportunity presents itself. We have that opportunity here and now. So that's the name that I'm highlighting for Chaikin Analytics clients today. I think you want to take a look at it. Sector tracker, movement over the last 5 days, major sectors. Energy, top of the list with a little bit of a rebound in oil. Discretionary financials and comms round out the top 4. The defensives are middle of the road, real estate, utilities. I think a lot of the moves we're seeing here, as I said yesterday, are counter trend in nature. While yields are falling, I do expect the utilities and the staples to outperform. Risk-off environment still prevailing. Tech down hard. A lot of that move coming yesterday with the leg lower in the Qs, the leg lower in Apple, weighing on tech. Materials, that is a sign of global market weakness. Remember what Apple highlighted. Apple highlighted global demand, in particular China. But if you've been following along at Chaikin Analytics, you've been reading my notes on a weekly basis, when I look at global markets have been in a downtrend for the entirety of 2018. This is not a new development. Apple calling it out is going to draw a lot more attention to it. We've been highlighting it for a long time. Our industry in focus today, NYSE Tech Services, is very bearish. Been underperforming for the past 6 months to the tune of about 27.74%. Power bar ratio, 0 bulls, 10 bears, 16 out of 21 subsectors, moving down 8 slots over the past week. Some of the indicative names there: Qualcomm, very bearish; Square, very bearish; and Tesla, very bearish, right? Tech, underperforming. Tech, under pressure. NYSE Tech Services, 0 bulls, 10 bearish or very bearish stocks. Let's take a look at one here today because it presents an opportunity, in my opinion. Square, very bearish stock, close at 52.42, down 8.36% yesterday. Weak trend, weak industry group. Ribbon at the bottom of the screen tells us we've been on that bearish or very bearish rating since October. And then in early November, stock began to underperform the market. Market and model in agreement. Dynamic duo in gear to the bearish side. Stock is currently nearing an overbought condition as Chaikin money flow is intensely bearish. Square is below a declining long-term trend line. Rally here back to the 21-day exponential moving average, and we did trigger one of our sell signals. This one, the money flow sell signal, triggers today. Again, futures are pointing to a higher open. Watch how Netflix opens. Watch how Square opens. They're likely to present opportunities to open positions to the bearish side. Or if you own these names, opportunities to manage your risk, trim your position. So, based on our process and our model, you shouldn't be in the stocks at all. I realize everybody's time frame is different, but in the here and now, these are not compelling names. Netflix, not compelling. Square, not compelling. Look for your opportunities to manage risk. Turning now to our trending names. Yesterday's S&P 500 movers, gainers and losers. Celgene up 20% as they are being bought in a cash and stock deal by Bristol Myers, which was down 13.26%. INCY up 7% as it caught an upgrade. Don't see any news to send HCP higher by 3.5%+. Weyerhaeuser, WY, rebounds 3.4% after being downgraded the previous day. AAP up 3%. These auto parts guys, AutoZone, O'Reilly, AAP, have really held up well during the market turmoil, during the weakness here. One of the things that we always like to point to is look for the names that outperformed and held up while the market was under pressure. Those are potentially your leaders coming out of a downturn. So as a base, or if a base begins to form in the marketplace, look for the names that are holding up on a relative basis. Loser side of the board, there's one culprit, Apple, neg pre, down 10%. Skyworks down 10.5%, Qorvo down 9%. They are part of the Apple supply chain. AMD, semiconductor stock, getting dragged down with tech. This is why I always point out, while we are technicians, it's always good to have an understanding of the companies, in particular who their customers are and who their suppliers are. Because if you look, Apple made a 52-week low yesterday. So did Skyworks, so did Qorvo. Despite the fact that these two stocks have neutral ratings, had you known that they were part of the Apple ecosystem, you could have avoided them and the persistent downtrend that they've been in. I always preach, have an understanding of the businesses. That's why our model is 85% fundamental. So what I'm talking about in our note today, to Chaikin Analytics members, flight to safety sends the 10-year yield lower. Look at this 10-year. We haven't spoken about it in a while, just given the holidays and everything that's been going on. 2.75 acted as support for a couple of days, really. Just I can't even call it support at this point. It acted as a speed bump for a couple of days, and as risk-off sentiment prevailed, yields dive lower, below the 50-day, below the 200-day, both of which declining. Deeply oversold now, so can't rule out a counter-trend rally, especially as we're nearing support around this 2.5% level. But the path of least resistance right now certainly seems lower for yields. Basically, the bond market is telling you that they don't think there's much upside left in the Fed's tightening cycle. It's above my pay grade whether or not I agree with that or not. I watch markets. I watch price. That's what the bond market's telling you right now. Fed has indicated at least 2 rate hikes next year. Market pricing in 0. That's what's taking place right now. So obviously we're going to want to pay attention to what goes on. Fed commentary whenever they're speaking. Also want to keep an eye on the jobs number today. FANG. We talked about Netflix. We talked about Apple yesterday. Here's a custom index that I built. Facebook, Amazon, Apple, Netflix, and Google. Steady uptrend throughout the majority of 2017 and 18. Now it's rolled over. Below the 200-day moving average. 200-day moving average has rolled over as well. Series of lower lows and lower highs is the textbook definition of a downtrend. And it's confirmed by the fact that the RSI of this index has shifted to bearish ranges. Confirmed downtrend by the market generals. Definite shift in leadership. You want to know who the new leaders are going to be when the market does stabilize? Look for the names that have held up on a relative basis. Those are likely to be your leaders coming out of the downturn. And that weakness in FANG is weighing on the Qs. So we looked at the S&P 500. Qs, same chart. Breaks through key support, rallies back. Key support turns into resistance, fails at that 155 level. We've been highlighting that level in our note to clients for the past few weeks. RSI, firmly in bearish ranges. Chaikin money flow, firmly bearish. Going to be a lot of work, has a lot of work to do. I think the markets have a lot of work to do to form a base before a durable uptrend can ensue. There is a lot of overhead resistance for all of the major markets. And as I said, the key themes remain risk off. What we're looking at here is high yield, HYG, relative to 7 to 10-year treasuries, IEF, pronounced downtrend below the 200-day moving average. This is investors seeking safety. They prefer treasuries over high yield bonds. That is risk off. That's safety seeking. It's confirmed by momentum. RSI series of lower highs as it shifts. This is the RSI of this ratio as it shifts to bearish ranges. That's it for today. Sign up for the email, ChaikinAnalytics.com/today. Daily stock ideas for free. I will see you back here on Monday at 9:15. I hope everybody has a great weekend.